Hello, everybody. My name is Christian Ludwig. I'm Head of Investor Relations at Deutz. Today, I would like to give you a quick update to one of the most important topics we presented to the investor community at our Capital Markets Day in November. But first, please have a quick look at our disclaimer. From January 1st next year, Deutz will be changing its reporting structure. Instead of reporting on our engine segments, customized solutions and compact engines, we now will report two new segments, Green and Classic. Green includes all our sustainable drivetrains. Could be electric drivetrains, our activities at Torqeedo and Futavis, also our hydrogen engines, and depending on the closure, also our investment in Blue World Technologies. And also all the related services will be included in the Green segment. Green, as of today, is still comparatively small, only roughly 4% of revenues on a pro forma basis, but is strongly growing. At the moment, it's also still loss-making due to high R&D expenditures and low economies of scale, but this will change. On the other side, we report our Classic segment. These are all our current combustion engines, related services as well. Classic is our cash cow, but still has a solid growth prospect ahead of it for the next years to come. Let's talk a little bit about numbers, starting with Green. As you can see, for next year, we only expect a small impact from the Green segment. As I said before, on a pro forma basis, we're talking about roughly 4% of our revenue, but it will be growing strongly. And by end of the decade, by 2031, we believe that this segment will be our largest segment with more than 1 billion in sales. And the loss making on EBIT level will actually already change by mid of the decade, by which we believe the segment will be profitable. The reason for that is not only the scale effects, but also, and this you can see on the right-hand side, that the R&D costs will come down significantly. Today, they're around 34%, will drop to below 30 by mid of the decade, and by 2031, it should be at a sustainable ratio of around about 6%. Now let's have a quick look at our Classic segment. We still expect the segment to grow for the next years to come. By 2025, we believe it will plateau, and then it will slowly decline as the transformation kicks in and more engines in the Green segment will be sold to customers. But still, we believe that the EBIT margin will remain in the high single-digit to low double-digit range across the period. The reason for that is that while sales will drop in the second half of the decade, R&D costs will also drop significantly. So we should be able to remain a nice, sustainable margin there as well. Putting it together, you can see that until mid of the decade, our Classic segment will still be dominating. But as said before, by 2031, the share of our Green segment will be more than 50%. And also, if you look at the R&D split on the group, you can see that already today, the Green share is significant, will be more than half by mid of the decade. By end of the decade, share of the Green expenditure in R&D will be more than 90%. So that was a quick glance into the future of Deutz. I hope it could take your interest. And if you have any additional questions, please give me a call or contact me via mail. Thank you very much, C11A, for having me today. Goodbye.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat11A, can make a company video with and about you, please email us at content@seat11a.com.